The major equity averages are steady into afternoon trade. Joining me in back from vacation is Virtu Financial's Matt Cheslock. He's going to share his insight with us. Matt, welcome back. Nice tan.
Well, it was good to be off, and come back to a week like this. It's good to get the juices flowing again.
Absolutely. Even though it's the middle of summer, we do have a lot of action going on. So let's start with the Fed, since Janet Yellen is testifying again today. So far, the market seems to like what she's saying. Some people say it's attributed to her comments on the balance sheet, while others say it's her hesitation when it comes to inflation. What do you think?
The rally is definitely attributed to her, and I think a lot of it is some of her dovish tone yesterday as far as rates. That was the thing that got the market moving initially. The futures were up 12 handles immediately upon her press release at 8:30 in the morning. So there was nothing that happened in the Senate yesterday that contradicted anything that could possibly have happened. So she's facing a little bit tougher grilling, I think, in the House early this morning, but the market is just seeming to take all of this into consideration, and now the market is now focusing on what we expect tomorrow out of the banks, which are probably the biggest. They were the biggest laggard yesterday on her testimony.
Right, and it's not going to stop there. We're going to have plenty of more Fed speakers this summer, and then, of course, their annual powwow in Jackson Hole in August. But sources say that the ECB's Mario Draghi is to speak there about his lack of dependency on stimulus. So where do you see the dollar going from here with this shift in central banks?
Wow, I mean, the volatility in the dollar yesterday was pretty fun to watch. I mean, the dollar sold off initially on the news, rallied hard later in the day, and finished close to unchanged. So I would expect a lot more dollar volatility with every central bank talk that's going to be out there. Let's remember, the only country that hasn't talked about raising rates is the Bank of Japan. That yen dollar carry trade has kind of unwinded here a little bit too. So there's a lot to focus on if you're watching the dollar, and you have to be nimble, and you have to be willing to be wrong for a short amount of time before you possibly could be right.
Sure. And where do you see the dollar going? I know you said it's the best of the breed. Could it possibly get weaker? And what does that mean for future corporate profits and earnings?
It's a good question. I'm not a currency guy at all. Do I think it gets weaker? Probably not. I think, it's still the best of breed. I still think that we're going to see, the dollar rally here a little bit. It's sold off pretty good, and I think it's going to find a bid here somewhere soon.
Okay, well, now that we got the future covered, we can't leave our viewers hanging without talking about the action tomorrow. Like you said, we're going to have some earnings from the banks. That sector has rallied in recent days. And we also have retail sales, which has been shaky, of course, around Amazon Prime Day. So how will you trade around tomorrow's action?
Well, it's interesting. Target had some good news today, and that stock, has been a laggard for so long as far as the retail goes, and that helped buoy that sector a little bit. The banks will be very interesting to see if they start taking some profits. If they start talking about, trading desks having lack of volatility and lack of volume, does that affect earnings? Does the Fed forecast going forward with not as many rate hikes, does that affect what they're talking about? So it's all going to be not in what they did last quarter. It's all going to be the forecast for the third and fourth quarter. That's what you're going to want to pay attention to if you're trading the financials.
All right. Well, Matt, thank you so much. Welcome back from vacay, and we hope to see you next Thursday. Don't go anywhere.
Absolutely. I'll see you later.
All right. Thanks, Matt.